Natural resources are the foundation of the modern global economy. Nearly every industry we rely on today, from construction and transportation to electronics and renewable energy, depends on metals and minerals extracted from the earth. Steel builds the skyscrapers that define our cities. Copper powers electrical systems and communication networks. Aluminum is used in vehicles and aircraft. Even the smartphones and computers we use every day rely on a complex mix of mined materials. Because of this constant demand, the global mining industry plays a critical role in supporting economic development and technological progress. As the world continues to industrialize and adopt new technologies, investors have increasingly begun looking toward mining companies as a way to benefit from the long-term demand for natural resources. However, investing directly in individual mining companies can be complicated. Mining operations are often located around the world, and the industry is influenced by factors such as commodity prices, geopolitical risks, environmental regulations, and global economic cycles. To simplify this process, many investors turn to exchange-traded funds or ETFs, which provide diversified exposure to multiple companies within a single investment. One of the most widely recognized funds in this space is the iShares MSCI Global Metals Mining Producers ETF, PIC. This ETF is designed to track the performance of large global companies involved in the production of metals and mining materials. By investing in a single fund, investors gain exposure to dozens of mining companies operating across different regions of the world. A global approach to mining investments, unlike some mining ETFs that focus primarily on companies based in the United States, the PIC ETF takes a much broader international approach. The fund includes mining companies from North America, Australia, Europe, and several emerging markets. This global diversification allows investors to participate in the performance of some of the largest mining corporations operating worldwide. Many of the world's most significant mining operations are located outside the United States. Countries like Australia, Canada, Brazil, and Chile are home to massive deposits of valuable resources and host some of the largest mining companies on the planet. By including firms from multiple regions, the PIC ETF helps reduce the risk associated with relying on a single country or economy. This international exposure also allows investors to benefit from the growth of developing economies, where infrastructure expansion and industrialization are driving strong demand for raw materials. The metals that power modern industry, the companies included in the PIC ETF, are involved in producing a wide variety of industrial metals that are essential for modern life. Among the most important are iron ore, copper, aluminum, and other base metals used in manufacturing and construction. Iron ore, for example, is a key ingredient in steel production. Steel is used to build bridges, skyscrapers, railways, ships, and countless other pieces of infrastructure. As cities expand and new transportation systems are built, demand for steel, and therefore iron ore, remains strong. Copper is another crucial metal included in many mining portfolios. Because of its excellent electrical conductivity, copper is widely used in power grids, renewable energy systems, and electronic devices. As countries modernize their energy infrastructure and expand renewable power generation, copper demand has become increasingly important. Aluminum is also widely used in industries such as transportation and aerospace because of its lightweight properties and durability. Automakers, aircraft manufacturers, and packaging companies all rely on aluminum as a key material. The role of global economic growth. One of the main forces driving the mining sector is global economic activity. When economies grow, governments and businesses invest in infrastructure, construction, and manufacturing. These projects require enormous quantities of raw materials. For example, the construction of highways, rail systems, airports, and power plants consumes vast amounts of steel and other metals. Similarly, urban development in growing cities requires concrete reinforcement, electrical wiring, and structural materials, all of which depend on mining. Emerging economies are particularly important in this regard. As countries develop their industrial capacity and expand infrastructure, their demand for metals can increase dramatically. This long-term growth trend is one reason why many investors continue to view mining companies as strategically important assets. Technology and the new metals economy, in addition to traditional infrastructure demand, New technologies are creating additional demand for certain industrial metals. Renewable energy systems, battery manufacturing, and electric vehicles require large amounts of materials such as copper, nickel, and lithium. Electric vehicles, for instance, typically require significantly more copper than traditional gasoline-powered cars. Wind turbines and solar farms also require large quantities of metals to produce generators, wiring, and support structures. As governments around the world invest in cleaner energy and modernize their power systems, the demand for these materials could continue rising for years to come. Mining companies that produce these metals may benefit from these long-term structural trends. Large-scale mining companies. Another advantage of the PIC ETF is that it offers exposure to some of the largest and most established mining corporations in the world. These companies often operate massive mining projects that require billions of dollars in investment and decades of planning. Large mining firms typically have access to extensive reserves of valuable minerals and operate across multiple continents. Their scale allows them to manage complex supply chains, invest in new exploration projects, and maintain long-term production capacity. Because of their size and global reach, many of these companies are key suppliers of essential materials used by industries around the world. Commodity cycles and market risks. Despite its importance, the mining industry is also known for its cyclical nature. Commodity prices often fluctuate based on changes in global supply and demand. During periods of strong economic growth, demand for metals may rise sharply, pushing prices higher. In contrast, economic slowdowns or recessions can reduce demand for raw materials, leading to lower prices and reduced profits for mining companies. This cyclical behavior means that mining investments can experience periods of volatility. Investors who choose to invest in the sector often need to be prepared for price swings that reflect changes in global economic conditions. Environmental and sustainability challenges. Environmental regulations and sustainability concerns are also becoming increasingly important in the mining industry. Mining operations can have significant environmental impacts, including land disruption, water use, and energy consumption. As a result, governments, communities, and investors are placing growing pressure on mining companies to adopt more responsible practices. Many firms are investing in technologies that reduce emissions, improve waste management, and restore mining sites after operations are completed. Sustainable mining practices are becoming a major focus for the industry as companies attempt to balance resource extraction with environmental responsibility. Outro. Despite the challenges associated with commodity cycles and environmental regulations, the mining sector remains a vital part of the global economy. From infrastructure and transportation to electronics and renewable energy systems, modern industries depend heavily on materials produced by mining companies. For investors seeking exposure to this critical sector, global mining ETFs provide a convenient and diversified approach. The iShares MSCI Global Metals Mining Producers ETF, PIC, offers access to a broad portfolio of mining companies operating across multiple regions and producing the metals that power the modern world. As global infrastructure projects continue expanding and new technologies increase demand for industrial materials, funds like PIC provide investors with a gateway into one of the most fundamental industries supporting the global economy.